Hello and welcome to the Trading with Ashley show. Super excited to show this particular video to you because I am live trading in this video. When I woke up today and I saw that we were going to have a red day as the market started to progress, I know in my past life, before I was an experienced trader, I would have been like really scared, really depressed, worried about my portfolio. But now that I am a professional options trader and I do this for a living, I saw it as an incredible opportunity. And I manage a Discord with over 700 traders, and we were just on fire today, just selling puts left and right, capturing some really great premium. And if we are assigned the shares of these stocks, no worry, because they're stocks we want anyway, we'd be getting them on an extreme discount. Then we can turn around and start selling covered calls once they decide to head back up. And so I think you'll like this video. It shows you the power of, one, having cash available to trade with. I definitely like to preach to everybody. You want to have at least about a 25% cash available to you for red days like today. And what you're going to see is really cool because in 20 minutes, I was able to create over $5,000 in premium. So for those of you that don't think you have the time to do this, it shows you that in 20 minutes, once you know what you're doing, that you can make enough money to supplement your retirement or even retire young like I did. In fact, I started selling covered calls on my company stock while I was still at work. And that's how I started to learn this whole process of the wheel strategy. But then I'm going to also show you something really cool. So on a red day, you may say, okay, how can you make money on a red day? Well, selling puts. But on a green day, I had sold covered calls against my PLTR position. And now you're going to see as I show you that those covered calls are paying off handsomely because PLTR is pulling back today. And so there's so many ways to make money if you know what you're doing on how to sell options. And that's what I teach. I've got several videos to help you. Also, I do mentoring and coaching within my Discord community. So if that interests you, I'm going to leave a link below so that you can get in touch with us and look at joining our Discord. I have several people that have recently joined due to my $25,000 challenge. And we're having so much fun because we have already made $900 in the short time we started the challenge. And so I'll have an update for all of you at the end of the week on that challenge and let you know how it's going. We're going to run it for another 3 weeks. And so if you want to join in on that $25,000 challenge, basically what we're doing is we're seeing how far we can get with $25,000 in cash, selling puts on that stock MSTR. It's one of my favorite. And so if you want to join us for that, feel free to join us and you can jump in on the challenge. I do updated trades for those that keep joining. Okay, now let's get into all of the detail. I'm going to show you how I made $5,200 in 20 minutes. So when we're having a red day like today, I see it as an incredible opportunity to sell puts. So the first thing I do is I go to an app like Robinhood. They have a scanner with Robinhood Gold that I like quite a bit. It's the highest volatility options. And then once I get there, I sort by volatility. You can sort this by the least, highest volatility and the most. And of course, I like looking at the ones with the most. And one of the first things I do is I look right here to see if it's red or green. So anything that's red is something I might be interested in selling a put on. And I look through this list to see some that I just won't consider. For instance, SMCI, I'm not going to touch that one right now with all the issues they have with their accounting practices and the auditor resigning, staying away from that one. DJT right here, very volatile stock, so you could be enamored by the premiums. However, this one can go up and down so much just based on social sentiment that I don't think it's a safe trade to make at this point, so not touching that one. Coming down, looking at like GME, I wouldn't consider that one. I kind of put it in that category of a meme stock. And you just kind of look through here and see quality companies that are just having a red day. And so there's plenty for us to choose from today. And I'm very glad that I saved a lot of cash for a day like today. So the first one on the list I'm going to go consider because NVIDIA's incredible stock. I have some of it and I've been enjoying watching its appreciation. So if I'm going to go take a look at NVIDIA, the next thing I'm going to do is go look at the technicals on NVIDIA.
So I'm in Yahoo Finance, and one of the first things I want to look at is right here, this earnings date. So I want to keep this in mind. I do know that if I trade over November 21st, that it's going to be very volatile, and I'll just have to decide my comfort level with that volatility. And so next, I want to actually go to the chart and take a look at some of the technicals. Now, for my today's examples, I am going to be selling monthly options. And so what I want to do is I want to go and look at the 3-month chart. When I am selling monthly options, I want the value of more time in the equation. So that is the 3-month chart, and this is going to help me get a better indication of where this stock may land. So the first thing that stands out to me is the Bollinger Bands and the RSI. Now we are 50 on the RSI, looking like we could go a little bit lower. It's heading down, but as long as we hold 50, then we are considered to be in a bullish mode for NVIDIA, and maybe it's just having a rough day. But if we are 50 or over on the RSI, I have more confidence going into the trade. And then next, I want to look at my Bollinger Bands. I'm going to zoom in a little here so you can see. It looks like the bottom of that band is around 125. So if I'm wanting to sell a put for a monthly option, that might be a good entry to consider. And that will be a starting point when I get to the option chain. So once I get to the option chain, I want to select an expiration date. And so we're currently at the beginning of November. So I might consider going to December to look at potential options. Now, once you go to the following month, I like to look at the 3rd Friday of that month, because that's when the institutions do their buying and selling, and that's usually a good indication. You can see a lot of the volume and open interest, which helps give you some ideas. So I'm going to look at 12/20. Now, a reminder, I am trading over earnings, but I am far enough from earnings that the stock could bounce if it goes down. So let's go look at where we are with price action. You're going to see puts on the right and calls on the left. And remember, I was looking at that 125 mark. So if I look at that right here, that is paying $6.95 a share. So that's $695 premium that I'll collect if I sell this 125 strike price. So that's one that I can consider. And I look right here, and there is a lot of volume and open interest. There seems to be more right here at this 120 mark. This is 57,000 in open interest. And so if you want it to be more conservative, you could look at this 120. It's got a 0.26 delta. And what this means is there's about a 26% chance that it could settle in here at 120. Or quite frankly, you could do any of these in between. But for this example, I am going to settle in on this $125 strike price, and it's got a 0.33 delta, giving me about a 33% chance that I am going to be assigned the shares at 125. Once I get to my platform, I want to start filling out the information. So here I'm going to select options, and then I'll select my account. I am going to put in my symbol, which is NVDA, and then I want to start putting together the information to sell this put. I would want to go to sell to open because I'm opening the trade. My quantity is going to be 1. This is a put. The expiration, I am going to go down here to December 20th, but I do like how Fidelity puts in here their earnings, so you know you're fully aware if you're trading over earnings. So I'm selecting December the 20th, and I had settled in on that 125 strike. So there it is right here. So when I get to this part, I can put in a limit order or a market order. And to decide, you want to kind of look at the bid-ask spread. There's only 5 cents between the bid and the ask. And so it'll probably give you a fill right here in the middle, which isn't bad. You can consider that. If it's a wider bid-ask spread, you want to put in a limit. But for the sake of this, I'm going to go ahead and look at executing the trade. So it looks like it's going to want to pay me about $695 in premium. And this max loss right here, this is showing you that if NVIDIA goes to 0, which is highly unlikely, and I'm assigned the shares, then I will lose the full amount of the money I put up minus the gain. So that would be a total risk of $11,805. However, I do want to share with you that I think the way this is listed is very scary for new traders, and I want them to fully understand you cannot actually lose this entire amount unless the stock goes to zero. But I like what I see. I am going to preview the order, and I am going to place the order. Bam, we just got a fill on it, and so we are good. That is another $698 I can put into my broker account, and then we'll have to wait to see what happens as we get closer to December 20th. If we are trading well above 125 or anything above 125, then I get to keep 100% of this $698 I just made selling this put. If we are below 125, then I will be assigned the shares at 125, and I'll have to wait for recovery before I can start selling covered calls against it. Going back to my list, let's look at some other options. Tesla. All right, so Tesla's a one with a lot of high volatility, so you have to select carefully. Let's go look at it on Yahoo Finance to get a better sense for what our technicals may be on it. We don't have to worry about earnings. That's not until Q1 of next year. So when I go to my chart, I want to consider some technicals. Now, again, I'm doing the 3-month chart. And so now let's look at what we have going on here. We are definitely in a bullish mode. We're at 57. So this is a good opportunity to consider puts. We're just having a red day when we're in a bullish mode on the RSI. So now that that's the case, I'm going to start looking right here at the middle of the band for potential levels of support. And right now that gives me like 237, or if I want to go down to the 50-day moving average, it gives me about 233. So let's keep those levels in mind. Maybe something around 235 might be a really good level to consider selling a put. For this particular example, I'm going to go ahead and use that date in December as well. So we're getting a little bit over a month in this trade. And I'd like to look at that 235 level as a starting point. Okay, if you look at this, the delta's 0.3. This is an appropriate delta if you want to own the stock, because this is going to give you about a 30% chance that you will be assigned. And this is paying quite a bit today. It's paying $10.55, so that's going to be over $1,000 for this trade. So I'm going to select 235, and I am going to sell the expiration date of 12/20. All right, this order is ready to be teed up. Let's go ahead and process it. I am going to be receiving $1,055 for the order. I placed the order, and look, it's been filled. So right now, I have just made another $1,064 for entering in this trade. Looking at AMD, AMD is another stock with a lot of great opportunity. Just having a rough time, had earnings recently. So let's go look at the technicals. Now, this, in my opinion, is a really good trade setup because let's look at this. You see it's at the bottom of the band, but keep in mind here, we are in a state that is considered bearish because we're below 50 on the RSI. So in this situation, you want to consider there's a little bit more room for it to go down. However, when a stock goes outside of the Bollinger Band, a lot of times it will come right back up into the band. And so if you want to go below the band, it's usually a good opportunity to get a stock at a great deal. So you can kind of see when you look right down here, it came below the band, but then quickly came back up under the band. So I think we're at a really good opportunity with this stock as long as something fundamentally is not broken. And so I might want to go look for expiration dates about a month from now. And let's look at this 140 level because that's below the band. And if it gets down there, it may then turn around and go back up. If I go with that 140 strike, it looks like I'll be getting about $700. So I like this trade setup. I'm going to go ahead and execute the trade. There we go. Max loss. Don't let that intimidate you. It would have to go to 0 to get there. And bam, we just placed another order. And that one was filled at $7. So that's another $700 that I will have in my broker's cash account. I really like SoFi. Wouldn't mind a little bit more exposure to SoFi. Google is another great one. I've sold a lot of puts on Google this week. Let's go look at both of those. Okay, looking at SoFi, this one's barely down. It's actually kind of flat right now, and it's had a recent run. We are at 71 right here on the RSI. So this gives me a little bit of pause because when we are 70 or above, we are typically in an overbought situation and there's more room to the downside. So this one would be a little bit more risky to take the trade because I will probably be safe in the strike price I select. However, what this is telling me is I can more than likely wait and get it even lower if it dips down some more. Maybe once this is a little bit closer to 60 or even 50 might be the best time to sell a put. So I'm going to hold off on SoFi right now and wait until the RSI comes down a little to decide when to strike on this particular one. Next up, let's take a look at Google. So we've got some interesting stuff going on here with Google. If you see, we are still in a bullish mode. We're at 64 on the RSI. We are above the top of the Bollinger Band, which may explain why we're having a red day. Now, Google did just have earnings, and so that should be considered. And so all this needs to probably settle down. However, with that being said, one thing that stands out to me is right here. You see this red line? This is the 200-day moving average, and that serves as a real strong support for a good quality stock. So if I were going to go sell puts, I might consider going somewhere close to this 160 just to see if we can get a pretty good feel on it, because the truth is if I'm assigned at 161, then that will actually be a good trade to ride on the way back up. So let's keep that in mind. Let's go see what the premium is if we stick around that $160 level. All right, I'm taking a look on the option chain, and it does look like we have quite a bit of open interest right here at that $160 level. It's paying $250, which is okay. It's not the strongest. So I might want to take a little bit more risk, and maybe I want to go a little bit higher because my deltas are still below 0.3, even if I go with 165. And this is a great stock. I wouldn't mind owning it at 165. If I wanted to be a little bit riskier, I could go with this 170 strike, and I would be paid a little bit over $500 for that one. So these are just the decisions that need to be made. If you don't have enough Google and you want a little bit more exposure, then you may be more aggressive with the 170. Or if you want to be safer and just, be able to insulate yourself against further dips, then you may want to go with that 165 one. All right, I decided on the 165 strike, and so we are about to go ahead and make this sell. Looks like I'll be getting about $375. And Google's a great company. If I'm assigned the shares, no problem. I would enjoy having that one. And look, we were just filled at 381.
Okay, are you having fun yet? We're only halfway through my sold puts. So let's go back into the computer and I'm going to sell some more. I'm having a lot of fun making tons of money.
Next, I want to look at Hood. This one has gone down quite a bit today. So you want to really be careful on the technicals with this one. And let's go look at them. Hood is a lower price stock, so this may be good for those that are interested in lower priced dynamics. Now, I listened to their recent call where they showed us the new platform, and I liked a lot of what I saw. So let's go look at the Hood on the technicals and see if this is something that we want to own. Now, they just had earnings, and their earnings ended up tanking the stock. Now, a lot of times, as long as something fundamentally is not broken, that's a really good time to consider the stock. So here's what I am seeing. If you go and look at the 3-month chart, let's go take a look right here. We are on the 3-month chart. We are 41 on the RSI. So this means that we could keep going down further, or it can auto-correct and back up we go. But we are almost at the bottom of the Bollinger Band, which sits at about 23. And then look right here. You see this 200-day moving average is 1951. So $20 might be a really good opportunity for this stock. And then let's zoom out just to get a better indication of that $20 level. Yeah, it looks like this is support because you can see right here, these candles right here, they bounced off of this. This was going back to the beginning of September. And these candles served as some good support. If you wanted to be even safer, you'd pull it down here and look at these candles and you'd go below right here, this 200-day moving average. But I think that this company will continue to do well, especially if Bitcoin keeps running. So I think I'm going to want to consider looking at something around the $20 strike price. Now, because this is a lower price stock, I am going to sell more contracts. I am going to go ahead and sell 10 contracts. So that would give me 1,000 shares if I input the shares, and then right here when you execute it, it'll show you. So this is going to give me $680. Max loss is $19,320, but again, that will be only if this stock goes to zero. So you can adjust the number of shares that you want by changing the quantity of the puts. Every put you sell is going to represent 100 shares, so 10 would represent 1,000 shares. Now, those of you that like any kind of Bitcoin plays, here we have Coinbase. Coinbase has had a big drop today. They're sitting at 189. So let's look at some potential options. Now, I would only trade this one if you believe that Bitcoin will be going up as we get through the fall. And if so, then Coinbase will more than likely be going up because they have more interest in people trading on their platform if Bitcoin is running, and they get money from the fees. So this is one for those of you that have a strong belief in Bitcoin having its bull run in the fall. All right, looking at Coinbase on the 3-month chart, a few things stand out to me. Let's look at this RSI. So we just entered, we crossed over the 50 down to 47. We had been doing pretty good. Also, we did fall under the 200-day moving average. So it'll be important to see how this stock reacts over the coming weeks if Bitcoin starts running again. Will it immediately go back up? And if so, that'll give you more confidence. But I wouldn't mind having more exposure to Coinbase, but now I need to decide on what level I want more exposure to. So one of the first things that stands out to me is right here. We've got this 50-day moving average at 182. And today we are trading kind of right above it. We're trading at 189 at this point. And so you would expect some kind of a relief bounce as we get close to these technicals. So keep in mind this 182, and let's go look to see how much premium we can get if we sell a put at this level. Oh, wow, this one may be the most aggressive one yet. If we are receiving almost $1,700 for this trade, then that is quite the return. And so that should be considered. That's about a 10% return in a short amount of time, looking at a little bit over a month. So I really like this trade. I could go ahead and put in a limit order just to make sure that I get at least the 17. So I'll go ahead and do that. And look, it was filled at 17.10. So we did a good job on that one. So now let's go calculate everything that we received from this rapid fire trading, looking at really good opportunities with the market being red today. Okay, this is when we started trading these contracts at 131, and then I'm done trading by 153. So we are looking at a little bit over 20 minutes of trading, and that is yielding us about $5,259. And this is something that we will fully realize the premium on this if each of these expire worthless. If they don't, we'll be assigned some of these shares, and then we can start selling covered calls. Well, let me show you a covered call that I had sold that is profiting very handsomely today. So it's the other side of the coin. When you sell a covered call and a stock pulls back, you make money that way as well. All right, let's take a look at Palantir. I own 5,000 shares of Palantir, and I had sold covered calls on it when Palantir was trading much higher than we are today. And so if you look right here, this one expires in a few weeks on 11/15. And this one is already profiting $3,757. And I still have another $3,400 that will more than likely be mine to keep as long as in a few weeks by our expiration date, Palantir settles in below $50 a share. So this shows you how you can make money not only when the stock market's going up, but very happy when the stock market goes down, a red day like today, because I have made significant money on both sides of the equation. Calls that I had sold earlier when the stock market was higher, and then I was able to get some great premium when the stock market went down today.
I hope you found that helpful. If you are with Trading with Ashley, remember there is no trader left behind. And if you want to watch another video where I am showing you how to sell puts to create about a $10,000 a month income, watch that video right here.